I've watched a few boom busts here in the uranium cycle. The most important thing is, at the end of the day, the vast majority of them, in fact, almost all of them, will not become mines. So if you think you're a long-term investor, you want to be like Warren Buffett, you don't want to be like Warren Buffett in the uranium sector, because a lot of these ones you're thinking are the biggest and best and they're the greatest, they will not be mines. We're going to need higher prices, and a lot of these juniors will benefit. In some instances, the crappiest juniors will do the very, very best, but don't get led on to think they'll actually be mines someday, because they won't be. They'll be great speculation tools to make some money, but please treat them as trades, because at the end of the day, they're zeros.
This episode of MiningStockEducation.com is brought to you by Sandstorm Gold Royalties. Sandstorm Gold Royalties is a different kind of gold company. They purchase royalties on select mining operations and receive a percentage of the revenue in return. Sandstorm now has a portfolio of nearly 190 gold royalties around the world. See how gold royalties differ from other gold mining investments at sandstormgold.com. That's sandstormgold.com. Sandstorm Gold Royalties trades on the TSX as SSL and on the NYSE American as SAND. You are listening to Mining Stock Education. Thanks for tuning in. I'm your host, Bill Powers, and I'm back in Toronto for the Mines and Money Conference, and I'm sitting down with top-performing fund manager Warren Irwin. When I interviewed Warren last at PDAC in March of this year, that was one of the interviews that got the most positive feedback, and so Warren doesn't do too many interviews, but I reached out to him again and asked him if he would sit down, take some of my questions, and also answer some of the questions that some of you emailed in. So Warren, thanks for sitting down again.
Oh, no problem, Bill. I really enjoyed our last interview.
So did I. It was, like I said, very well received, and there was a lot of online engagement regarding it. Let's start off with this first question. As you look at the electrical vehicle revolution, what are your top commodities to play, and are there any specific companies you'd like to mention?
Okay, well, one thing I like when you take a look at electrical vehicles, you have to look at, well, what's going to take to build them, what's going to take to build the grid to power them, and how are you going to power them. Let's start upstream a little bit with the power. I'm not a believer in solar or wind because there are dark nights. It happens every day. So solar doesn't work at night. Also, with respect to wind, I'm not a big fan of wind right now. It's heavily subsidized, and I'm not a fan of any of that stuff. And we basically need good, long-term, steady eddy power generation. The only way that's being done is with hydro and with uranium, and obviously coal. Coal is a non-starter going forward. We just can't. Too many people are dying from the health effects of it. We've dammed up all our rivers, and that's obviously a shame, but hydroelectric power is a great source of power. I'm a huge fan of nuclear, especially not only the ones that they're building today in China and how they're reducing their reliance on coal, but really I'm really excited about the future for nuclear, and especially the Gen 4 nuclear reactors. They're modular, they're fail-safe, and they're really, with the modular nature of it, it brings down the cost of it. And with respect to already being the fuel being liquefied form, it eliminates meltdown, so it is a fail-safe. So I think there's an exciting future in nuclear power. I think nuclear power will be the answer that everybody will eventually come to. So I'm a bit of a bull here on uranium. When you take a look at the grid, and obviously building the cars, you're going to want to look at something as simple as copper. I'm a fan of copper. Obviously, all the major copper companies are looking for new copper assets, seeing what's coming down the pipe. When you take a look at specifics with respect to batteries, I'm not a big fan of lithium. I believe the current producers can produce all the lithium we need. There's no shortage of lithium in the world, whereas finding a big copper porphyry that's able to mine profitably is quite difficult still. When you look at more specifics, let's say cobalt and nickel, cobalt, there is substantial political risk in cobalt, given a lot of it, or the majority of it, is sourced in the Congo. So I think over time the battery producers will substitute cobalt. And also with respect to nickel, nickel's a pretty tough one to find, but once the price goes up a bit higher, some of these laterites will be able to supply a lot of the nickel needed. So I'm a huge nickel sulfide fan, but those again are very, very rare beasts to find. So nickel sulfide, if you're looking at summary, what I like is nickel sulfide deposits, good quality copper porphyries in good jurisdictions, and I like uranium to power the whole system, and I think that's sort of how I'm positioning myself.
For investors that are looking at uranium equities or investing in them, some juniors have gone up fivefold, I've observed, in about the last 4 months. What cautionary advice might you give some uranium junior investors right now?
Yeah, I've watched a lot of boom and a few boom busts here in the uranium cycle. The most important thing is, at the end of the day, the vast majority of them, in fact, almost all of them will not become mines. So if you think you're a long-term investor, you want to be like Warren Buffett, you don't want to be like Warren Buffett in the uranium sector, because a lot of these ones you're thinking are the biggest and best and they're the greatest, they will not be mines. And that's why I'm sticking with a more conservative play and playing NextGen. As you know, I was an early backer of NextGen. When they made the discovery, I saw how big and rich it's going to be. It's a tremendous discovery. And when you look at what they can produce, if you're looking at a market where primary mine production is 150 million pounds, and you're looking at one player that could generate 1/5 of that from its mine, you almost wonder if there's much room for some of these juniors that are out there spending money finding uranium. And the other question is, of course, is there a need for any of this uranium that they're finding? And some of the cost structures of some of these junior uranium companies out there are absolutely crazy. Some of the permitting risks on some of them are totally, completely crazy. So almost all of them will not be built. And you need to stick with high quality ones. Now, as far as making money on speculation, that's another story. Many of your followers may recall the big boom back a number of years ago when uranium hit $150 a pound. Well, I saw people making tons and tons of money on the crappiest juniors in the world. And I think somebody had told me at one point there were 600 uranium juniors. And today we might have 15 or 30, they're not that many. So a lot of them got destroyed. And what happened then is, and the reason I called the destruction of the uranium market, especially the juniors back then, was I said, okay, there's 600 juniors out there, and just say their SG&A alone is $2 million a year. Well, that's $1.2 billion just for SG&A, let alone exploration or anything else. So there's no way that amount of money is going to be jammed into the sector. So what's going to happen here is uranium's creeping up. It's gone up from $18 to $27, a really good move. Uranium is going higher because the current cost of production for many of the producers is higher than that. So if we're going to try and get some marginal increase in production, we're going to need higher prices. And a lot of these juniors will benefit. In some instances, the crappiest juniors will do the very, very best. But don't get led on to think they'll actually be mined someday, because they won't be. They'll be great speculation tools to make some money, but please treat them as trades, because at the end of the day, they're zeros.
I'm an American and you are a Canadian. We're here in your country. Here in Toronto, I drove from Detroit to be here. What's your perspective on my country as a mining jurisdiction?
Well, first of all, welcome to Canada.
Thank you.
Yeah, I'm not a super huge fan of the U.S. As a place for me to invest, because I like to invest in big exploration wins, and the U.S. has been, in a lot of ways, well explored. And the other reason I don't like it is sometimes there's permitting issues, and a lot of anti-mining groups, a lot of environmental groups hassling miners. It's a pretty well populated country, so it's difficult to find nice quiet little places to build a mine where nobody cares. And the other thing too I found, which I really don't like, is a lot of the American geos, they don't like to leave the country, and they like to stay in the U.S. And I'm not sure whether it's just they like living in Elko or Reno or wherever they live in the U.S., but they don't like to go further afield into a tiny bit more risky places that have not been explored or do not have a strong mining heritage like the U.S. has. So where we're going to find the big discoveries tomorrow will be in these hinterlands, which are reasonably politically stable, but are vastly unexplored. And those are the places you're going to find the big discoveries that excite the heck out of me. For the geo who doesn't want to leave Nevada, wants to drive to the site and things like that, those stories really don't excite me that much, because they're playing on the periphery. And let's say even in Nevada, the major mining companies have a lot of the ground locked up. So for me, and again, I'm a home run hitter. I'm after the big wins. I think the big wins will be found outside the U.S.
What's your perspective on British Columbia as a jurisdiction?
That's an interesting one. It's sort of a developing situation. I live in British Columbia, although I work here in Toronto. But it's kind of mixed. I don't know how to deal with it. Of course, you have a lot of the First Nations issues, because the treaties aren't nailed down quite as well as they are in the rest of the country. You've got a lot of environmentalist groups and things like that. Like how they can't even put a pipeline from Alberta to the coast, which is, one would think that it's a pretty easy thing to do, is to build a stupid pipeline, but they can't seem to even get that through. So that kind of gives you the environment you're dealing with in BC. So it is tricky. So, I wish the guys luck who operate in BC, and I'm sure they'll be able to get a few mines built, but it's not the most pro-mining and the easiest place in the world to work. But I know some guys doing work there. There's good work. So there's going to be some good discoveries. There are some good discoveries there. Let's hope they get permitted and built.
Next question comes in from a listener, and he is interested if you could give a few specific examples of jurisdictions that you like or don't like. Right now, you mentioned the U.S. already, both companies or regions and company names, especially if you have a couple examples of a country or company that's either not followed by most people, or in your opinion is a contrarian or opposite to the majority view and would surprise people.
Yeah, there are a few of those out there. Let's take a look at South America, and these are, again, my own personal biases, having worked and lost money in South America, and obviously made some money. The first one off the list is Venezuela. Not a hope there, not a hope for a very long time. I've invested in Colombia. I don't think I'd put 2 cents in Colombia again. I made some money with Continental Gold. I got out, fortunately. But the way people are being killed and kidnapped down there, I had a friend of mine kidnapped for 10 months. Recently, the 3 geologists killed by Continental. It just indicates it's not ready for mining. Ecuador, I've been involved in Ecuador for probably 15 years. It ebbs and flows. I hope the most recent positive attitudes towards mining continue, but there remains a risk that they'll go back the old way they used to be. Under Correa, back when we tried to get Fruta del Norte built their first time. Chile and Peru, some pretty decent jurisdictions. You have to watch Peru. The locals will be the issue there. You just want to be away from villages and stuff. And in Chile, the costs of operation are reasonably high. A lot of the land has been picked over pretty well. But there are probably some select opportunities from time to time if you get the correct ground. In Argentina, it's very state-specific. There's a rule of thumb out there. It has to begin with an S, or you don't invest in it. So I've got an investment there that I think is tremendous. Although, I've been jammed a few times in Argentina. I remember once we found a 2 million ounce gold deposit. Well, sure enough, the state goes and puts as soon as they found out we're going to use cyanide, they immediately put a cyanide mining ban in the state, so we couldn't mine that. Then, right now in the formerly Aqualine's Navidad silver property, and now owned by, the Navidad deposit's owned by Pan American Silver. It's a tremendous deposit, but as soon as we found that, the state put an open pit mining ban as soon as it found it was open pit. But it's a miserable, terrible place, and there's nothing wrong with open pit mining. In fact, if there's any place in the world you should be open pit mining, it's right there, because it's just, nobody lives there. It's an awful place. It's very arid. But that sort of thing happens in Argentina, and I'm not sure why. Whether we could talk about corruption and why they do that, and But I can't comment. It's been a few years since I've owned the Navidad deposit, but we were quite concerned that there was some high-level corruption in the state, and they were trying to do something with us, and I'm hoping that's not the case nowadays. But there are other states that are much more pro-mining, and I think, so in Argentina, you need to look at the states, go to the pro-mining states where people are supportive of what you're doing, and then you look at Brazil. I've lost a pile of money in Brazil. The ability to work there is quite difficult. Drilling costs are very high in my experience. It's difficult to get good equipment in there, so you're using whether it be locally made or substandard drills. The drill crews do not have the work ethic or the experience Canadian drillers would have, so it's not as if you could plop a bunch of Canadian drillers in there and get their level of productivity and their level of economies of scale. We paid a ton of money for very poor productivity, and it was a very tough place to operate in Brazil, I found. And so, if you just in summary, I think Argentina is a place to invest in certain states. Chile is good, Peru is good. The other thing too is I've had some experience in Guyana goldfields. That was a positive experience, and it appears that Guyana is a pretty good place to operate too. So.
A listener writes in and he says, what is Warren's thoughts on Garibaldi, and how have your thoughts changed over the past 12 months?
Yeah, as I mentioned earlier, I'm a huge fan of nickel sulfide. So when I see the kind of grades that they were pulling out, you got to be excited about it. And it's, the grades are tremendous, so all they need is tonnage, right? So I took an investment in the company when it had a stupid market cap. It was definitely way overhyped, and but I got in, right, just in case. And then they started coming out with some of their geophysics work. And what's interesting about geophysics is I find, at least in my experience, geophysics works extraordinarily well with nickel sulfide deposits, especially some of the downhole stuff being done. I love the work. Lamontagne did downhole geophysics for us when I was invested in FNX Mining up in Sudbury. Also, I've had tremendous experience with VTEM. We were using VTEM up with the Noront, big nickel discovery up there that found that. So between those two techniques, you're really able to zero in on the nickel. So I stuck my neck out. I paid too much for the Garibaldi shares with the hope that they could zero in pretty quickly on a decent sized pod. They put out presentations indicating that they've had these big structures picked up both in VTEM and downhole geophysics. And then, this summer drill program, we heard crickets all summer. And I'm going, okay, well, this is not good, because the other thing about nickel is when you drill a hole through a big width of nickel, you see it. It's in the core. You could take a good estimate of the grade. So I did not see this company, which is, I might add, one of the poorest companies with respect to disclosure that I've run across in the junior space, and also they're very promotional. So if they had anything whatsoever to promote, they would have promoted it. So when you hear crickets all summer and there's nothing to promote, obviously they've missed all summer. So as soon as my shares came off restriction at the end of the summer, I think it was September sometime, I peeled out all my shares. And then again, of course, the company pulls a little promotional stunt, does a deal and does some sort of miniature deal on a Monday, and they say, well, we've done this deal, blah, 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 and then we're really excited about our results that are coming out within the next week. Well, guess what? The stock ran from like $2.20 to $3 on that news. And I'm going, this is a great opportunity for me to get the hell off this stock. So I sold the last remaining shares of my Garibaldi. And I said, there's absolutely no way they're going to have good results, because had they drilled anything significant all summer, they would have had to have disclosed it, because it would have been completely visible to all the geos, to the company. It would have been clear what they had. And not only that, the drillers, they talk, right? And they start lifting core boxes. They're super duper heavy with massive sulfides. There would have been some scuttlebutt and rumors hitting the market. There was nothing all summer. And so without that disclosure, I was pretty convinced that they'd found nothing. And I was, well, it wasn't, let's put it this way, what the market was expecting. And shortly after those results, the stock was cut in half. And even today, at 150 million market cap, it's still very, very rich market cap, given they don't have an economic deposit yet.
What are your thoughts on the recent M&A activity that's been occurring in the mining sector and its significance?
Yeah, well, right now, I think people are realizing that, good discoveries are rare, and people are looking out, especially as you're seeing in the copper space. Everybody's trying to position themselves with copper, and I'm seeing that firsthand. I'm one of the biggest shareholders in Cornerstone Resources, and we're involved with Sol Gold, and we own the Cascabel big copper discovery in Ecuador. And you're seeing here recently, both Newcrest and BHP are quietly gobbling up Sol Gold shares whenever they can, and because they know that, Sol Gold is a tremendous copper discovery, and they're pretty rare, so they get gobbled up. On the gold front, we really haven't had an extraordinary, super exciting gold discovery quite yet, and we haven't had one for many, many years. Like the 10 to 20 million ouncer of open pittable, 1 to 1.5 grams in a good jurisdiction, that type of thing. I can't think of one. We haven't had a big discovery in quite a long time, and like one that really excites the market. The last one I could think of that was really exciting was the Aurelian's discovery of Frutal del Norte, right? And we got bought out for $3 billion, $4 billion by Kinross, right? That was pretty exciting times, and some point we're going to get another discovery like that, and those are the ones. That's my job, to try and find those again, and try to find these big discoveries that the majors will salivate all over.
So I would take it you don't get excited about when a company's taken over at a 40% premium at a 52-week low that we also have seen.
Yeah. I'm not that doesn't excite me. The excitement I get is when you buy a stock for 50 cents and it goes to $20. That's sort of where I'm trying to make the money, to try and speculate on corporate takeovers and M&A activity is quite difficult. I used to work in mergers and acquisitions early in my career, and I was actually sitting in the meetings with every single piece of information on an M&A transaction in front of me, and I had no idea whether or not the deal would go through or not, because you just never know. And people who feign interest in a company are really not interested, and people who feign disinterest are really interested. So you really never know. So it's pretty tough to figure out M&A. So what I try and do is I just buy the good quality companies that I believe the major companies would like to put into production. And my two biggest holdings are Cornerstone, which has the interest in the Cascabel copper discovery, which is one of the biggest and richest copper discoveries in the world. And I also have a big interest in NextGen, which is the biggest undeveloped and one of the richest uranium discoveries in the world. So those are two really amazing discoveries, and I think the majors will want both of those. And when that happens, you never know. It may be tomorrow, it might be 2 years from now, you never know. So I don't try and speculate on that, but the biggest money I make is generally as you ride it from the discovery stage to the kind of stage where they're at right now. For me to have these two investments on my books it's quite conservative for me because they're very they're already pretty much drilled out, and they're just waiting to be picked off by the majors. And when that happens, you never know.
Do you hold any producing companies in your fund?
No, I don't. No, they're too blue chip for me, the producers.
What's your thoughts regarding mining finance, and could you share specific insights that the average retail mining investor could appreciate and apply to their own investing?
Mining finance, I guess we'll stick with just financing of exploration companies versus financing of companies going to production. Well, let me just comment on production. First of all, if I own a deposit that is really, really good, and I'm a junior, I will not put that into production, because if it's so good, a major will buy you and they'll put it into production. So when I see juniors putting stuff into production, it's obviously stuff that the majors didn't think was good enough or world class enough to do themselves. Like the number of projects that are world class, the creme de la creme, the kind I look for, that are put into production is almost negligible. It's a very, very small number, right? So that's part of the reason I don't own producers. Is if I don't own a company that's good enough to be bought out by a major, I don't want to own it. Now on the financing side, on the junior front, there's a tremendous amount of pitfalls out there. There are a lot of companies that are way overhyped. Novo, quite recently, I was very negative on that. They were way overhyped. Garibaldi was overhyped. It's funny how retail jumps all over a stock and pumps it like crazy. And sometimes with the help of newsletters and other pumpers, and they just get to points where there's no chance you'd ever have of making any money, because a Garibaldi at 300 million market cap without an economic deposit is pretty outrageous, right? And Novo, what did they get to, $1.5 billion? And that's pretty outrageous. Like, what are you going to sell it for? You're making it buy it for $1.5 billion. You're going to sell it for what, $10 billion? Well, when's the last time a $10 billion acquisition happened in the gold mining space? So the important thing is, and there's a lot of hypesters, a lot of fraudsters out there, a lot of lifestyle companies. So and these people are generally the ones that overhype their paper. And they resort to a lot of very bad things to get their stock prices up. Whereas there's a whole group of mining companies out there which are trading at super duper cheap valuations for what they have, and those are the ones I try and focus on. And for me to take a punt on Garibaldi is very out of character for me, but I just love nickel sulfide so much I couldn't resist. But fortunately, I got out of that situation with my skin still attached to my body.
Could you talk about the challenges and opportunities of starting a resource-focused hedge fund today compared to when you started yours a couple decades ago?
Yeah, well, the biggest thing of starting a hedge fund in Canada, anyways, and is the regulatory burden is just absolutely overwhelming. And the problem with a hedge fund too in the resource space is the volatility is so extreme that a lot of them who were my peers years ago are no longer in existence. And that's the biggest risk. I've been in the business 20 years. I think of the people that started when I started, there's only 2 people I could think of that are still in business. All the rest are gone. And those 2 people don't do resource only. Of all the resource only, I'm the only guy. And over the last number of years, especially the last downturn a few years back, it pretty much wiped out everybody out of the business. So would I recommend you start a business in the resource business only in the hedge fund land? Probably not. The regulation is killer. And it's gotten way worse in the last 20 years, that's for sure. And just due to the cyclical nature of it, if you do it, make sure your capital is stable, because you don't want to get redeemed out as soon as things get really tough for you, And if you're taking money in the hedge fund space, let's say from a fund of funds, they don't have much patience for a 2 or 3 year downturn, and they'll yank your money right at the bottom, and next thing you know, you're running no money, and or you're being forced into a liquidation right when you shouldn't be, right at the bottom of the market. And that happened to a number of players in the market, and I watched them blow themselves up over the last number of years. And they were selling out everything at the bottom. In a number of instances, we capitalized on that and bought some of those shares from those distressed sellers because they were getting redemptions. So I'm not sure that it's the smartest thing in the world to do to start a hedge fund in the resource space. But fortunately, I was dumb enough 20 years ago, and I'm still around. And I'm old enough and wily enough that I probably learned a few lessons in 20 years doing this specific thing, and fortunately I was able to survive the last downturn. It was definitely really, really tough to do so, though.
Did you survive it by keeping a large cash position, or how exactly did you manage that?
Yeah, well, what I did was, again, I've been in the business 20 years, so what I did was, it was many, many years ago that I set the stage for it. First thing you need is stable investors, because they yank their money, you don't have a fund, right? So what I did was, when my investors were up 3, 4, 5, 10, 15 times their money, I told them, I said, guys, take your original capital out. That way just let me run with the house's money. So they did that, and a lot of people are just running. They've taken not only their original capital out, but some profits out. So the money I'm running for them is sort of their fun money, right? And I make sure when I do take money from people, it's their high risk money, so that they know that if they want a high risk fund, I'm the guy to talk to. So so the capital base I have is pretty robust. Whereas, let's say in 2008, I lost a significant amount of my assets that were that we had from fund of funds. I think we had 4 or 5 fund of funds, and I think we lost 4 out of the 5 fund of funds at the bottom of 2008. So that was great for my investors who were long-term with me, and mostly high net worth guys, in that we were able to consolidate many of our positions at super duper low prices. And this last downturn in the mining sector, what we're able to do, we're getting some redemptions, but not a massive amount. But what we're able to do is focus on our absolutely best names and pick them up at super duper cheap prices. Like when we bought Sol Gold, we bought them super cheap, and we bought NextGen. I think we bought 10% of the company, which is a large percentage to buy in the market mostly. We paid 50-60 cent range on average for that, and now it's trading out at $2.60. So we made a good pass on that, and with respect to Sol Gold, we paid hardly anything for Sol Gold back in the day when it was down and out. And it was a pretty good time to be buying some cheap paper, but you had to have the paper and you had to be in business to do it. Fortunately, we had good investors that stuck with us, so that's why we're still in business today.
In light of everything we've talked about, Warren, thank you for your time. Is there anything else you'd like to share with the investors that are listening?
Yeah, no, the mining industry is an exciting place to invest. There are a lot of good people in the business that could make a lot of money. Stay away from the scammers. If there's any hint of dishonesty, stay away. Everybody has a history. Check their history up before you invest with them. And I think we're on for a number of years of good times, fun times, and hopefully we'll have some big discoveries. And as many of my peers say, do not invest thy whole wad. Don't believe anything you hear from these guys, and be careful with your money. Investing in the mining business is a risky business. Don't invest all your money in it. It's always good for having a bit of fun in it, but make sure you're prepared to take your losses in lumps.
Excellent advice. Thank you very much, Warren.
All right, thank you so much, Bill.
For millennia, ancient pharaohs prospered from unparalleled riches made possible by Egypt's resource-rich gold deposits. But despite this rich history, modern Egypt remains one of the most underdeveloped gold mining countries in the world. But that's all about to change. Aton Resources is leading the charge on the Egyptian mining revival. As the only public exploration company in Egypt, Aton Resources has first-mover advantage. Focused on their 100% owned Abu Marawat concession, Aton Resources is advancing several exploration targets, including the recent discovery of the legendary Lost Mountain of Gold at Rod Ruin. Learn more about this exciting drill program and other news at atonresources.com. Aton trades on the TSX-V under the ticker symbol AAN and on the OTC under the ticker ANLBF. Thank you for listening to this Mining Stock Education podcast. Please subscribe and share with like-minded investors. Visit us on the web at MiningStockEducation.com for more resources on precious metals and natural resource investing. At our website, you can also sign up for our free newsletter for interview transcripts, stock picks, and more.